Is the future of hydrocarbons becoming bleak? Well, over 100 international banks, which were all present at the UN Climate Change Summit in New York recently, committed to decrease their support and investment in the oil and gas sector in the coming years. If implemented, this represents about $47 trillion in value and will threaten upstream and downstream operations worldwide. International banks like Deutsche Bank, ABNAmro, Citigroup, Barclays, and ING are part of the plan. So, with decisions like this, no wonder these banks aren't doing all that well. But reading about decisions like this, which are loaded with huge financial consequences, that's when my interest is piqued. But rather than focusing on the banks, let's focus on oil and go where dividends may increase as a consequence of the banking decisions. And specifically, let's take a look at Royal Dutch Shell, which is an American Depository Receipt or ADR. And as requested by Snowfire, we're going to focus on the Class B shares. So let's take a look. Royal Dutch Shell offers an outsized dividend yield of about 6.4%. But is Royal Dutch Shell worth the risk in this volatile energy sector? Historically, the company has consistently grown dividends despite the swings associated with oil and gas prices. Shell accomplished this by focusing on improved efficiencies, the asset portfolio, and careful use of leverage. Shell is engaged in exploration, production, refining, and marketing of oil and natural gas. The company is one of the largest oil and gas companies in the world, producing about 3.7 million barrels of oil per day. The company conducts conventional exploration as well as through rock, shale, and coal formations. As shown by this chart, the company's production profile is well diversified, reducing the company's cash flow risks. Despite oil prices being significantly below oil prices in 2014, the company's cash flow from operations during 2018 surpassed the 2014 levels. The improved cash flow generation resulted from a large reduction in the cost of production, as well as improved production due in part to the acquisition of British Gas and internal efficiencies. Meanwhile, the downstream business remained mostly stable. The company has guided to a run rate of 28 to $33 billion in organic free cash flow by the end of 2020 based on stable prices. Further, the company is likely to generate enough cash flow during the period of 2019 to 2021 to buy back stock as well as to continue to pay a healthy dividend. The company is likely to return around $26.2 billion per year from 2019 and 2020, and a minimum of $125 billion or $25 billion per year in dividends and buybacks between 2021 and 2025. Ben van Beurden, the CEO of Royal Dutch Shell, stated that looking to the 2021 to end 2025 period, we expect to have a cash potential of $125 billion or more to be available to distribute to shareholders over the period. That is half of the market cap of Shell. We are fully committed to our current dividend per share, and we expect any dividend growth to be resilient. Again, that from the CEO of Royal Dutch Shell. So now, let's go and take a look at our charts. And we're looking at the 20-year monthly chart on Royal Dutch Shell. We're looking at the Class B shares, and the symbol, at least on realtimestockquote.com, is RDS/B. Depending upon your portfolio, it might be RDS-B or .B. It depends. So there may be other variations. You'll just have to check with your platform. And for disclosure purposes, I do not hold any shares of Royal Dutch Shell, either the Class A or B shares. And looking at the price chart, we've had a pretty good roller coaster ride with those ups and downs. The bottoms in this level here, somewhere around $40 a share, and then the tops here and here at nearly $90 a share. We're in a current downtrend. I don't think this current downtrend is going to bring us all the way down to 40. It is possible, but I don't think that's where the probabilities lie. We'll take a look here at the MAC, and we can see that yes, it's in a downtrend. The fast line just went through the zero line with the slow line coming to the zero line here shortly. But I don't think that this is a real negative decline. At least I don't get that sense. It is possible that we could go this far, say as in 2016 or 2009, but I don't think so. I think we're going to be somewhere in between where we were in 2003 and 2013, someplace in there. I don't think the downtrend is done. I think we probably have about 2 quarters worth of downtrend, and that's just based on experience watching this stock in times past. The histogram is not going to tell us much more than what we got from the MAC. Moving here to the price rate of change, we can see that things are still doing some sawtoothing here, but I would imagine that we're going to bottom before we get to that negative 25 level. That would be pretty negative. We're not quite there. I think we're going to hopefully base somewhere near the current level, but it's going to take some time. Moving into the RSI, we're at a moderately weak 41.55, but I think again that downtrend is pretty close to bottoming. It is going to take some time. I don't think we're going to go this far or this far down, but it might be similar to the 2002 to 2003. We might go below this level here, which is about 30. But I have the sense that it's healing, but not quite done. Into the stochastics, that looks pretty good. There was an attempt with the fast line trying to move through the slow line. It failed, got reflected back down here. I think it's going to try again, and hopefully it's going to be successful above that 20 level. I think it will be. It was at least way back here. Then in 2009 and then 2015 to 2016, it got below that. But I don't think that market conditions are that severe, at least not yet. If we had a major recession, then I'd have to change my opinion. But right now, that seems to be somewhere off in the future. Volume looks fine, and then the Williams also looks fine. Looks like it's attempting some sort of bottoming with that move down to this level and bounce off. That's a pretty good bounce off of that low here. But I think we're going to do some more sawtoothing in that area. Moving back up here to the price chart, I think given my intro, there is some definitely interesting things going on the banking and oil sector. So that's something definitely to keep an eye on. But that, again, as a consequence of banking decisions, that just might improve the dividends depending upon how necessary financing is needed by Royal Dutch Shell, and they all need financing. So it's a possibility that yields will go higher. In the meantime, I think you've got plenty of time, probably several months to a couple of quarters. And in that meantime, you can definitely conduct your due diligence on the fundamentals as is usual. And so for today, that's ChewDog Charts. Thank you.